The importance, influence, and impact of credit information systems in the global economy on deciding credit risk, on deciding credit evaluation, and on the basic principles of decisioning whether to give a loan is becoming more and more important. In such a scenario, credit reporting starts taking on a role which not only reduces risk but also helps cost reduction, efficiency, customer delight, and turnaround times. The World Bank Group has played an extremely important role in the evolution of standards, practices, and principles in the credit bureau industry across the globe. One of their initiatives, taken around the year 2011, was to commission a report on the principles of credit reporting. And this module looks at those principles and enunciates its general direction and introduces practitioners and other stakeholders to these general principles. In this module, therefore, we are going to cover what those principles are, what the intention of those principles were, and how they have evolved over the years using technology, experience, and knowledge gained by real-life practitioners. It is important to understand that these principles are not a blueprint or a mandated guideline. They lay out a directional path. They encourage fairness of data collection, they encourage safety of data, and they encourage fair, transparent operational processes for all the stakeholders to follow. Let's take a look to start with who are the key participants in any credit information system across the globe. I want to caution you on one point here, which is that this is a global path, a global direction laid out by a World Bank report, and its applicability to different countries, including to India, might not be immediately relevant or immediately obvious to us who are actually practitioners of the credit bureau industry in India. The first participant that we should talk about are data providers. Data providers are not only the banks, the NBFCs and the HFCs, but globally also non-financial creditors, trade data, other private databases, whether that is pertaining to, for example, in India, GST, sales tax, etc., and of course, public record agencies. The second key participants that I can think of are the service providers, the data service providers. And again, there are two categories: credit information bureaus, which we are all familiar with, and credit registries, for which we actually have a separate module for you later. The third key participants are the people who actually use the data from the bureaus, use the information that the registries and the bureaus provide. They include lenders, of course, government agencies who use the credit registry, and other trade organizations or trade entities which provide credit but are not lenders in the classic sense as we understand them. And then, of course, the fourth key participant, and probably the most relevant to you and me, are the individuals and the smaller businesses, private limited companies, public limited companies, what we would categorize as borrowers, whose data is fed into the credit bureaus and the credit registries, and more importantly, their behavior and their repayment history influences and helps take a lender or a credit provider to take a decision whether to give a loan or not, and if to give, on what terms to give the loan. Now, let's look at what are the roles typically of these four categories that we've just spoken about. So let's take the first one, which is data providers. These are entities that provide data to the lenders. Their biggest and most important role is to ensure that they report accurately, report in a timely manner, and they report complete data to the bureaus or the registries, because the quality of what they put into the bureaus will determine the quality of what the bureaus give back to the lenders. Now, public record agencies such as tax authorities, utilities, etc., they should make sure that they facilitate access to their database so that the credit reporting service providers, the bureau and the registry, has a more complete and a comprehensive database, and therefore enriches the quality of the report they produce and enable better informed decisions. The second key participant, and what is their role? They are the credit reporting service providers, the bureaus and the registries. They have to ensure that their data processing is secure, the data is safe so that the privacy and any regulatory requirements are maintained, and provide high quality, timely, efficient services. All users, either as a lender or in a supervisory role or as a trade entity, should be able to access these services under conditions, rules, and regulations that ensure fair play, transparency, and that the intent for which the bureaus and registries were set up is being followed both in spirit and in law. The third key participant are the users. Now, their main role or their main responsibility is to ensure that they use the information that is available through the credit bureaus and the credit registries in a proper manner. When we say proper manner, what we mean is within any regulatory framework that might apply in a particular country, and the data is stored by them. The data that they have collected from the bureaus is stored and accessible in a manner that it does not lead to intentional or unintentional abuse or misuse of that data. The fourth key participant are the data subjects, the individuals like you and me who borrow and whose data goes into the bureau or the registry, and of course the companies, the non-individuals, the SMEs, the MSMEs, whose data in terms of their borrowing and their repayment behavior goes into the system. Now, it's important here that these entities, the individuals like you and me, as I said, and companies, provide complete, truthful, and accurate information. Because if anywhere you have seen the adage work that garbage in is garbage out, it is in the information system of every country. If you put good data in, you will get a good report, a good score, a good product, a good service back from the bureau or the registry. But if you put incomplete data, if you don't update data in time, if you give inaccurate data, then that is going to be a challenge for you when you receive reports back from these registries and bureaus, because it will be incomplete, and that will lead to perhaps wrong decisioning, incomplete data, and therefore your credit risk might be jeopardized by the fact that you don't have full and complete data. Now, sitting on top of all of this is the fact that the authorities, the regulators, as we know in our case, the Reserve Bank of India, should make sure that the system that they put in place, the environment that they put in place through regulations, through rules, through laws, through acts, through directions, is efficient, is fair, is transparent, and make sure that all the stakeholders, especially individuals and companies whose data is going into the system, are given a fair opportunity to either dispute data, correct data, so that all players find the value of the credit reporting industry more important than these irritants or these apparent inconsistencies that could lead to disputes, litigation, and finally a challenge to the entire system itself.